What is a mortgage? Types, how they work, and examples. What is a mortgage? Mortgage is a type of loan used to purchase or maintain a home, land, or other types of real estate. The borrower agrees to pay the lender over time, typically in a series of regular payments that are divided into principal and interest. The property then serves as collateral, collateral to secure the loan. The borrower must apply for a mortgage through their preferred lender and ensure that they meet several requirements, including minimum credit scores and down payments. Mortgage application go through a rigorous underwriting process before they reach the closing phase. Mortgage types vary based on the needs to the borrower, such as conventional and fixed rate loans. How mortgages work. Individual and business use mortgage to buy real estate without paying the entire purchase price up front. The borrower repays the loan plus interest over a specified number of years until they own the property free and clear. Most traditional mortgages are fully amortizing. This means that regular payment amount will stay the same, but different proportion of principal as interest will be paid over the life of the loan with each payment. Typical mortgage terms are for 30 or 15 years.